derivative bets against gold, made the connection that gold price in dollars is just grossly undervalued.
Now, Andrew, you talked about World War III not being played out as a hot war, but it would play out in the gold market and force a revaluation that we've never seen anything like this before. And you'd mentioned that there were three things that you were looking at that is forcing this reevaluation. Can you talk about these three things?
Yeah, Shane, now's the time. We actually have some meat on the bone. So let's take a look at that. And these three main things, Richie, which really, I mean, obviously there's a ton of information out there, but there's three main things to take away from the Russia invoking the nuclear gold option, as we called it. One is the formal launch of the petro-ruble currency linked to gold. So that's now been essentially, that is definitely underway. The second thing that we really focus on is the rising ruble benchmarked floor elevator has been placed under the global gold price, sucking out paper market liquidity into the physical market. Now, that's something that we've been waiting for a long time, but is accelerating the process. And the third thing is really, we've noted attempts by officials to intervene in the US dollar ruble foreign exchange cross to try and tamp down the gold price, but how that's going to fail. So essentially, those are the things we really look for, because it is that exchange rate that actually determines the floor for the price of gold. Now, the confirmation last week that Russia now formally prices its gas energy trade in rubles benchmarked to gold comes on the back of the already active informal 30% discounted oil for bullion ruble trade. And that's beginning to trigger yet unfactored physical gold arbitrage opportunities as it becomes recognized that the petrodollar will ultimately be replaced by the petro-ruble. Now, obviously, this is only the very start of this process. A lot of people will scoff at the idea, saying, well, there's no way that the petrodollar can be overturned. Yes, it can. And there are so many reasons for that. But you know, really, this is a process. But with everybody's poker hand now played, it is actually irreversible. Now, the actionable arbitrage trade has been insignificant up until it escalated on Friday, the 1st of April, when Putin signed this irreversible mandate to only accept payment in rubles or gold for its multi-billion-dollar energy trade. If not, you were going to either not receive it or the price would be at a premium. Now, a formal announcement regarding oil and all commodities benchmarked to rubles and gold and its gold cross is guaranteed to follow soon. And the rumor is, if it hasn't been done already today, it will be done very soon. Now, the trade is going on, but it's not formal. Now, the move actually sent a shot across the bow of the entire derivative-heavy commodity sector. Now, the impact of this tectonic de-dollarizing shift, it's just not priced into the gold, silver, or commodity markets yet. And of course, rallying the ruble exchange rate cross versus the US dollar is what's going to happen here. And it's going to elevate the peg gold for floor window. We'll look at that more closely in a little while. But geopolitics aside, stepping back, geopolitics aside completely, the gold and silver were rallying before Russia put a floor under the gold price. Now, the Russian central bank anchored the Russian central bank anchored gold floor is interesting, as it's created this massive arbitrage opportunity to take the undeliverable leverage COMEX paper gold price. We talked about the EFP, how that then flows into the deliverable 10 times larger spot gold market to buy physical gold, to exchange with Russia for heavily discounted oil, and to sell the oil into the global market at a massive profit. And we'll look at those numbers in a while too. But while this is just the thin end of the wedge, it's not small potatoes, as by Western buyers cutting themselves off from Russian oil, what it's done is raise the premium for physical oil sold by OPEC, the OPEC Plus, to an average of around $5 to $10 above the quoted Dubai benchmark price. Now, the joke is that the buyers of this premium priced oil are the same disingenuous buyers paying a premium to sanitize the Russian oil trade. I mean, this is a ludicrous situation. And let's just put some numbers on that arb trade. Now, we're recording this episode on Wednesday the 6th. Brent is at around 108 this morning, but liquidity providers holding rubles or gold, they can swap these rubles or gold for $75 oil. And for this example, that's a 30% discount or thereabouts, plus minus 30% to Brent crude for this. I mean, obviously, it can work for any of the oil markets, but to keep it simple, let's just look at Brent for the moment, because we quoted that price. Now, following paper-centric selling after Fed comments yesterday, don't forget that Brainard came out yesterday, and what did we see? We saw this dip in this bond yield spike, the paper gold market start to sell, ignoring the fact there's a massive physical shortage. And so if we look at the actual benchmark, as that happened this morning, gold benchmark this morning was benchmarked at 1925 spot. Now it's moved up and down from there since, but and up again. But with the 30% discount allowed the purchase of 25.5 barrels of oil per ounce, right? So even if selling this sanitized oil back at market, not even trying to seek a premium, the next round trip arbitrage profit per ounce, that creates an arbitrage profit per ounce of $800 or thereabouts. Now, obviously, this oil trade is generating tons of gold to be employed. We're talking about $800 an ounce. Now, but here's the rub. This is the big rub. The gold that flows into the Russian central bank to pay for this oil, this is what it's doing. It's squeezed the physical market, sucked out paper market liquidity, and bolstered the ruble exchange rate, raising this 5,000 rubles to US dollar gold price higher. Now, talk about a sanctions own goal. We talked about that kind of last time, but this is now formalized. Now, the EU along the way, they foolishly boxed themselves in. They were foghorning on the main street. They're never going to pay for gas with rubles. But this poker bluff is being called. Hungary today indicated is caving already today. And with no backdoor and Europe imminently facing unfactored economic damage, if they don't get this energy, the Eurozone will be forced to back down again, albeit in a sanitized way. And that's the ludicrous part about it. They're going to end up paying more. And when you start to buy oil from a different source, then you're going to need to refine it. It means you've got to re-refine it and pay a premium because it's not the same oil. Now, energy buyers, and in the future, oil and commodity buyers, are going to be forced to open Russian bank accounts to enable them to pay for energy in euros, US dollars, which are immediately sold to purchase rubles. Now, already we're seeing about $1 billion of oil trade coming into Russia every day, 400 million of gas flows. So really, attacking the ruble currency is actually be a hell of a lot more difficult than is made out. But the US is fighting tooth and nail. But it is Europe that is going to suffer the consequences. So the deals will be done. It won't be all on the same side of the table. By the time the formal announcement on the 25th of March that Russia had pegged the goal at 5,000 rubles per gram, had wakened the ruble. The weakened ruble was at 103 before this announcement. It was front run, by no surprise, by some very well-connected arbitrageurs, rallying the ruble a full 20 handle from its lows at 103 to 82.90 before the announcement. Now, currently it's about 81.5 today and strengthening. And the same liquidity providers that telegraphed the ruble gold trade was imminent now factor that the energy swaps for ruble will raise the ruble's relative value to a minimum to 70. Now that's a big deal when you're working out the valuation. That's a big deal when you're working out the valuation for how to price US dollar price gold based upon this floor. Now we'll look at the gold price correlation to the ruble in a moment, but with a fixed 5,000 ruble per gram price formally locked in, a panicking paper-centric gold cartel laden with undeliverable short derivative bets against gold made the connection that gold price in dollars is just grossly undervalued.